C'est de la poudre de perlimpinpin.
Good morning, everybody. It is Tuesday, full moon Tuesday, May 13th. It is just coming on 5 a.m. over there on the East Coast. I'm a little bit knackered. I had my final cancer therapy session today. I am pretty beat up, but let's get into this because a lot of questions going out there after the big gap up on Secretary Bessent and his 3 a.m. pump Sunday night, Monday morning prior to the open, and taking us up to, actually, it's not a bad place, but there are a couple of things that you need to know now that we gapped above that major problem area. As of right now, futures fractionally down 95 points on the Dow, 114 points on the NQ, 0.5% over on the ES, down 26 points, still well above yesterday's lows, which, as you recall, SPX 5786. And we are down just about 0.5%, 10 points over on the Russell 2000. So where are we? How did we get here? But more importantly, where are we? Let's get started with where are we? Where we are, okay, having, oh, that needs to be changed, that 57, excuse me. I made a mistake. I do it quite often, but yep, I made a mistake. 57.86 being the lows yesterday, 58.45.37 being the highs yesterday.
Super.
57.86.95, as you recall, your March 25 high, your 50-day moving average down to the 57.50s, but this 147-point gap up, similar to the April 23 108-point gap up, similar to the April 8th 131-point gap up, and I don't have any other ones here, but there are a couple of them way back at COVID. I was expecting to see a red close below the open, and I was wrong about the open. I said the open was 58.20 because I glanced and I didn't have my glasses on. The open is 58.0720, so 58.0720 is the weekly candle. However, year to date, and this is what caught my eye, along with this year over year to date, the SPX is down 1%. 1%. So, once again, because you need to know what you need to know, the SPX year to date is 59.0326. And I'll get to that in a couple of minutes when we get over into the charts. But again, something I have been tracking quite often, being this year over year calculation, and how, like over here back on April 29th, we popped up a greater than 10% year over year. We fell back down below that fractionally after that, but not in a big sell-off. More importantly, that we stayed under it because a year ago we were higher than where we were a year and a week ago. Noticed it right here back on April 2, the tariff day. That was the last time that it happened. We're up there, boom, and kabam. Same thing happened over here back in March when we lost that greater than 20% after the 5-year anniversary of COVID. Again, you need to either be an absolute addict to being successful at this, or you've got to be a complete nerd to be able to go in and look at these numbers and say, I get it. One or the other. For the average Joe, you got no clue because you just don't spend enough time on your spreadsheets. However, 3 green weeks in a row is still there, and a 4th green week would be a close on Friday above 58.0720. However, I bring you on to, again, what we have been talking about for the better part of 2 weeks. May 19th, The expectation, due to the respect of how well this Fibonacci spiral has worked, the expectation come May 19th, which is next week, of a high being placed. Doesn't mean that we have the top. We could get a dip and a bounce, whatever it is. But again, go back to your own Fibonacci spiral, do your own numbers, look at your own chart. Got a lot of respect for that. And as you know, today is the full moon. Full moon is 3 days prior, 3 days after. Thus, we are center stage inside of the full moon circle, where we have this 600 plus trading session waiting for minus 20% correction. The bounce has now been 20.9%, plus 1,000 points. And you want to put it into context? Go right ahead. The bounce off of the August yen-pocalypse sell-off was 1,000 points, 20.8%. Go right in there. Look at your big bounces there on April going into that August high. Right there, 24.10%. Look at your bounces. These are the bounces coming off of the big bottoms all the way to the big tops. These are not your nickel and dimes like I already shared with you over the weekend. But you are now up 20.9%. So be very, very careful about how you judge yourself as far as looking at the upside. But for today, I've got two big major points, which is 590263 being plus 1% and 5785, that big warning, that warning sign of yesterday's lows, right there where the March high was, being our minus 1%. We all know what happens when we get a minus 1%. Over on the QQQ, I've got the same thing that I'm looking at over here. Year to date, only down minus 1.25%. Where do we open up at the beginning of the year? We opened up at 514.30. So once again, things that you need to know, not necessarily take action on, but you need to know these things. And as you see here on the QQQ, it closed less than 1 point above the open. I was looking for something similar to that on the SPX, and unfortunately, didn't even come close. Closed up 37 points, which is weird because the Russell 2000 closed down 1 point from below the open. So once again, we're in the 200s, got out of those IWM calls, thankfully, greater than 42%. But that's not what we're looking for here. I will leave you here with the QQQ. The bottom bounce on the QQQ is now 26.22%. So pay very close attention to these things if you want to, because it is a video game, and that's the reason why we play it. So let's just get on to it. Here, charts. SPX, we're looking at a fourth green week possible because of the way that we started, not because of the gap, but because of where we started. 5807.20, that's our weekly candle right there, 5807.20. The Donald Trump stock market is 5783, something you need to know about. Like I shared with you over there, 5903.26, 5903.26. That is your year-to-date open, where the SPX would go green on the year. Now let's get into a little bit of detail on that, with that 5903.26 being right up there. Because I've got to zoom out a little bit further, and I think it will be a little bit dirtier than it needs to be. But yeah, let's go ahead and do this. 2 hours. Apologize. Here we go. This being that we don't know if this is a 3 or a C, but we have been calling for quite a long time now that we are still going to be going up into this full moon, into that May 19th date. We've got a cluster of Fibonacci's that are all hovered right around that 5908, 5900. 5908 being the ABC, 1.5%, 150%. The 100 extension over here on another ABC that I'm kind of been tracking, which I don't really have a lot of faith in, but Fibonacci coincidentally happens to be there. Our bullish 1, 2, possible 3, with the 123.6 being right there at 5900, because your 3 wave tends to go to your 123.6 100 extension. And then you've got the big COVID, You've got the big 2022, 5906.07. So a major Fibonacci cluster being up here in this 5910, 5900 area. So if you want to make it simple and just go out there and look at something like a 5910, 5905, 5905, 5900 for later in the week, that would behoove you, but there's not that much credit that you're going to be getting until we get up into that price level. So keep aware of it. Over here on the SPX, as you see here, major gap that needs to be filled from over the weekend. Huge gap. And this gap from back here, back on March the 5th, is now gone. And just to give you an idea, and we'll go ahead and push you to the upside, there are no more gaps. There are no more gaps. There's no more gaps. There's no more gaps. There's no more gaps. There are no more gaps to the upside. So because all gaps get filled, be careful how you go ahead and push this. But again, you've got that 5903, 5905 up to the upside, your 5800 quite obviously, and obviously that 200-day moving average and the 5786. So be careful with how you do it. Full moon coming in, like I said, here we are, plus 20.9%, plus 20.8% over here. Right over here, the big bounce coming off of August. Let's zoom out a little bit more. Let's see what we got for our bounces. Here was a 14.46 before you got a drop, 28.29 before you got a drop, 20.98 before we got a drop, 20.16 before we got a drop, 18.94, the big bullish bounce off the June bottom over there into August before we cratered to the 2022 lows. We can go out even further if you want. Point being, you are very, very, very high right now. And here's your QQQ plus 26%, ABC 123, 508.82, very close to it. Looking at this still as, don't know, but probably going to be that this is what we've been saying from a long time ago, the beginning of the end of the end of the end, where we are going to be going to new all-time highs. However, we're due a dip. When that dip gets placed, then we'll know what we got. And again, to look to the upside on the QQQ, there are no gaps above. There are no gaps above. Sing however the fuck you want. There are no gaps above. Here's your Dow Jones. Again, still not able to break through. Oh, I am wrong. I am wrong. I fucking wrong too often. We did. We gapped above the April 2 tariff gap down. We gapped above it. So we've got our gap over here to be filled from over on the weekend, but we gapped above it. We made it up to 423. And yeah, you're right. I should have got into those DIA calls when I said I was going to get into them until I wanted to dip first. And over here on the IWM again, same thing. 1, 2, 3, boom, boom, boom. Right up into that 213 zone that I was expecting a long time ago and wound up holding those calls for a little bit too long. But now you're in the trouble zone, this 208, 213 area. So anyway, you're upside. You got it. Be careful with what you play with it. And I will try and find you another trade very similar to that Netflix trade. Where are we? Where are we? Where are we? Okay, yeah, another QQQ view. Again, just looking here at where we are and where our full moons are. And, oh, yeah, that's right. Our full moon is going to be coming on. No, didn't want to do that. Want to do this and duplicate it because we are going to be getting our full moon, dink, dink, right here in the next day or two. Netflix, 19 waves to the upside, looking for a move to the downside. And look at this. We're down at 1109. Down below 1100 to get to that 1080-185 so that we can start seeing reality coming back down into this 1069 area. No matter what, the call credit spread is going to work this week. Boeing. China is going to allow Boeing to deliver the planes that will fall apart in the middle of the air, but that doesn't matter because trading the chart, not trading the news. So, yes, the Boeing May 30th and the June 20th, nothing worried about for now because a trade is a trade is a trade. And here you go with your AMD. Like I said on AMD, you got about $30 to the upside. We're not quite $30 to the upside yet, but hey, if you want to get that exact $30 to the upside, go right ahead. But, money's there to be made. So anyway, I think I've wasted everybody's time. The medication that they put me on is a little bit stronger than normal because of what I went through today. So I'll see you in the chat room.
Yesterday, you can care all you want. Everybody